Welcome to the Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Maharrey. Thanks for tuning in. So as I'm recording this, America is in the latest iteration of the most important election of our lifetime. I've been through a lot of these in my lifetime. Seems like every 2 or 4 years we have the most important election of our lifetime. But anyway, regardless, I generally record this show on Tuesday evenings. Of course, it airs Wednesday morning. And I was debating holding off until tomorrow morning so I could talk about the election results. But I'll be honest, I'm pretty sure we're not going to have any definitive decision tomorrow. So I'm just going to stick with my normal routine. And I'm recording on Tuesday evening. But regardless, I'm going to go ahead and give you my election prediction. Now, I'm not going to try to guess the winner. Honestly, I think you're going to hear the term too close to call a lot over the next few days. I wouldn't be surprised if we don't know who won this thing, even as we get into the weekend. But I will tell you this, and I'm willing to put money on this. I'm willing to bet that I'm right about this 2024 election prediction. No matter who wins, whether it's Donald Trump or Kamala Harris, in 4 years, the federal government is going to be bigger, it's going to be more intrusive, and it's going to be deeper in debt. And on top of all of that, you will have fewer liberties. Now, we can debate whether one candidate might be better than the other, but neither one of them is going to be good, at least not if you define good as somebody who adheres to the constitutional system with a limited federal government. Now, if you want a massive federal government that is involved in virtually every aspect of your life, that's telling you how much water you can have in your toilets or, what kind of light bulb you can screw into your light fixtures, well, hey, you're good to go. This is the federal government for you. And either one of these candidates might make you happy. If you want a government that's going to intervene in the economy, start wars, spy on you, further devalue your money, you're good to go, right? Now, you might be thinking, well, Mike, aren't you being a little bit cynical? Am I, though? I mean, if history is any indication, I have to be right because this is the pattern we've seen with every single administration. Spending goes up, the debt grows, and we end up with new policies that infringe on our rights. And this was true during the Reagan years. Reagan grew government, more spending. It was true during the Clinton years, during both Bushes, during Obama, during Trump, during Biden. This is how it goes. Now, some are better than others, no doubt, but the general trajectory has been the same. And I really look at the size of the government based on the spending and the debt, and it just keeps going up and up and up. And, looking at this election, I just can't forget that Trump was actually worse than Obama on gun control. It's true. Obama's talk was much more anti-gun, but he never actually implemented gun control. Trump gave us the bump stock ban. And the ATF under Trump's leadership set records for enforcing existing gun control, which is every bit as unconstitutional as proposed gun control. So what I'm getting at here, and I don't mean to say, I'm not taking sides in this current election. I think maybe Trump would be better in general because he at least has some instinct toward deregulation, but he's not going to be good. He wasn't good the first 4 years. I don't think he's going to be good the next 4 years. And the problem is, here's the fundamental problem. It's not the people, right? It's the system. The system that we have now, that we've allowed to exist, gives presidents and Congress, for that matter, and federal judges too much power. And whenever people have power, well, what do? They try to get more power. George Mason hit the nail on the head. He said, those who have power in their hands will not give it up while they can retain it. On the contrary, we know they will always, when they can, rather increase it. So what that tells you is you shouldn't trust any politician, anybody who has power. You have to have a system. You have to have checks that limit their power. But we don't do that. We keep giving the federal government more and more and more power. Here's the ugly truth. Even if you like the short-term benefits you get from that power, right? You get a president or a Congress that you approve of, that kind of holds to your policies, and you empower them to do things that are outside of really what was intended in the Constitution. Well, the next person is going to come along behind them, and they're going to use that power too, and they're probably going to use it in bad ways. You're always setting a precedent for more and more power in the future. And again, probably from people who don't care about your liberty. So, even if Trump is great, if he is exercising unconstitutional power, which he will because the system is broken, well, you still have a problem. Mason understood that more power, or he understood that the more power you give people, the more power they want, and the more they're going to use it for selfish end. And Mason said this, and I think it proved to be prophetic. He said, I fear the thirst of power will prevail to oppress the people. It's exactly what George Mason feared today, right? Instead of a land of liberty, we live under arguably the largest government in history. Trump ain't going to fix it. Harris ain't going to fix it. And of course, this was not the plan. And I'll tell you this, nothing reveals how broken America's constitutional system is more than a presidential election. If the system was remotely like the one the founding generation envisioned, the one all the supporters of the Constitution said that they were trying to establish, it wouldn't matter who occupied the Oval Office. You probably wouldn't notice. I mean, it really wouldn't matter. The president's job under the Constitution is primarily supposed to be the chief executive. He executes laws that are passed by Congress. He or she is not supposed to be creating policy, writing law, setting precedents. Presidents aren't supposed to be running the economy. They don't create jobs. They're not lowering gas prices. They're not fixing inflation. All of these things that people seem to think the president does. That's not their job. I keep seeing this meme, and it gets under my skin every time I see it. It says, we need to turn the clock back to $1.89 gas and low interest rates. And they're hinting that, hey, like we had at the end of Trump's term, and I've seen some of it even put in more explicit terms. And, I keep thinking, what, you want to go back to the pandemic? When the government had the economy completely locked down? Because that's why gas prices were $1.89 at the end of Trump's term. That's why interest rates were so low. The Federal Reserve had forced them there in order to create enough stimulus to keep the economy limping along while government was making your store close, right? That had nothing to do with Trump. And here's the thing. It's not just that we're asking too much of presidents. The federal government itself isn't supposed to be doing all that much. I'd say 80 to 90%, maybe even more, of what the federal government does today is unconstitutional. And it shocks a lot of people when I say that. I mean, I know, I think pretty much whether you're on the left or the right, no matter who you are, I think most people will look at the current system and see some things that they believe are unconstitutional. But, when you say most of it is unconstitutional, well, Mike, you're getting a little carried away there, aren't you? Well, how did James Madison, oftentimes called the father of the Constitution. How did he describe the system as it was intended? He did it in Federalist number 45, and he said, the powers delegated by the proposed Constitution, because keep in mind, this was written before the Constitution was ratified. He said, the powers delegated by the Constitution to the federal government are few and defined. And he said, those which remain with the state governments are to be numerous and indefinite. And then he explained that most of the powers of the federal government would be used for things like war, peace, foreign trade, basically the United States facing the world, right? And he said all of the things that appertain to the life, liberty, and prosperity of the people was going to remain with the state governments. But it's clear that we flipped this entire system on its head. The federal government now exercises numerous and indefinite powers, with the president exercising a lot of them unilaterally. And then we have the state and local governments that have virtually been relegated to, subsidiaries of the feds. I am an advocate for limited constitutional government. And you ain't going to get that given the way the system is involved. The system is broken. I've been saying for a long time that if you care about the Constitution, if you long for a limited general government instead of this centralized behemoth we have, it's not so much that I have this fetish for the Constitution or that I think states are great. What I'm really advocating for is a decentralized system where decision-making is spread out, right? It's not all coming from one central, omnipotent government, right? And that's the way it should be. States should be exercising most of the power. Local government should be exercising most of the power because let's be honest, one size fits all from government in Washington, D.C. is not helpful. It's not beneficial. Because we're all different. People in California, they have a different political culture there than we do here in Florida or than they do in Alaska. So why not allow Californians to do California stuff and Alaskans to do Alaska stuff and Floridians to do Florida stuff? No, we want to impose everything from this top-down centralized system. And I think that's bad. I think that's where you get tyranny. That's where you get abuse, when you centralize power in too few hands. And it's interesting because you go back to the founding generation. Thomas Jefferson at the time warned that the country was too big to be governed by a small group of people in Washington, D.C. It was too big, too expansive, and that if that was allowed to happen, it would lead to all kinds of abuse. He was absolutely right. The system is broken. So electing a new president, getting involved in D.C. politics is an absolute waste of time, in my opinion. And, a lot of where I'm coming from here, if you follow the 10th Amendment Center, where I'm the National Communications Director, this is the kind of messaging that you will see. We are advocating for the decentralized system that was originally intended. And we oftentimes joke that, if you really want to fix America, don't ever call the 202 area code. That's the area code for Washington, D.C. And I get an exemption because my daughter lives in Washington, D.C., so I get to call her. But generally speaking, dealing with D.C. is not going to help you. And here's an analogy that I like to use. Imagine you've got a car, okay? Car's broken down. It's up on blocks. Half the engine's gone. There's no battery. Tires are all flat. It is just a broken down, dilapidated car. Are you going to be able to make that car run by switching out the driver? Well, of course not. The car is broken. The driver's not the problem. You could put an excellent driver in a broken down car. It's not going to matter. I think you could put an excellent president in office today and you'd still have the same problems in Washington, D.C. You would still see government growing, debt growing, spending growing, because the system is broken, because we've allowed it to have too much power. I wish people would spend even half the time and energy that they pour into these presidential elections and Congress and Senate. I wish they would just put a little bit of that energy into state and local government, because you can actually have an impact there. Donald Trump doesn't care about you, right? Your congressman doesn't care about you. Try calling Congress sometimes. Call your congressman, they say. You know what happens? You talk to an intern and you might get an email. Now, if you call a state rep or a city council member, I guarantee you're going to get at least a little bit more attention, because they're not used to that kind of pressure, because everybody's paying attention to what's going on in Washington, D.C. So at the 10th Amendment Center, our political strategy is all focused at the state and local level, because you can actually block some of this exercise of excessive power by using state and local power. There's a doctrine known as the anti-commandeering doctrine, and basically it holds that state and local governments do not have to use their personnel or their resources. They cannot be required to use their personnel or resources in order to enforce federal laws or implement federal programs. So that means that if there's a new gun control law, the state of Florida could say, you know what, we're not going to enforce that here. Now, they're not going to stop the feds from enforcing it, but the feds don't have the manpower. They don't have the personnel or resources. They rely on help and cooperation from the states. And this is exactly why James Madison in Federalist 46, right after he explained that this is supposed to be a limited federal government, the question arises, how do you keep it that way? And in Federalist number 46, Madison gave us a blueprint, and he listed a bunch of things that state and local governments and individuals can do in order to keep the federal government in check. And my favorite of these is a refusal to cooperate with officers of the Union. Those are the exact words that Madison used in Federalist number 46. It's an amazing strategy because, again, the federal government needs the cooperation of state and local governments. And nowhere do we see this play out better than we have with the legalization of marijuana. And, I don't care what you might think about marijuana, whether you love it or hate it, think it's bad, good, doesn't matter. The fact of the matter is, it is a state issue. It was always intended to be a state issue. And if you doubt me on this, just ask yourself why it required a constitutional amendment to prohibit alcohol, right? What's the difference between that and marijuana? It is not a federal issue. There is no delegated power in the Constitution for the federal government to ban a plant, but they do it anyway. States have effectively ended prohibition of marijuana by legalizing it themselves, because when they legalize it, they don't enforce the marijuana laws, and the DEA and the federal government doesn't have the personnel and resources to enforce it themselves. So this is a powerful strategy. Way better than trying to hope that you're going to get the right president and that they're going to fix things, because they're not. That's the reality, at least in my view. If you're interested in this strategy, if you want to learn more about that, go to 10thamendmentcenter.com. It's all spelled out, TENTH, amendmentcenter.com. And you can actually go there, and on the very front page, you can scroll down and you can download what we call the State of the Nullification Movement Report. And it's a free PDF, and you can actually read about the history of this strategy and how and why it works in more detail. So anyway, here's the thing. I'm not really a cynic. Yes, I am a cynic, but I'm also a realist. And that's why I made that prediction, because again, it's happened administration after administration after administration. The government keeps getting bigger and more intrusive. Some administrations admittedly are worse than others, but the general trajectory is in that direction. And being a realist, I think it's wise to prepare for that inevitability, right? I can't control who's in the White House. Even if I vote, my one little vote probably not going to make a big difference in the big scheme of things. I can't stop them from running massive deficits. I can't keep them from spending too much money. I can't keep them from blowing up more debt. I can't stop the money creation necessary to support the borrowing and spending, which means I can't lower the inevitable price inflation that you get from this fiscal and monetary malfeasance. I can't stop them from devaluing my money. But I can take steps to protect my wealth and my personal liberty. And as far as I'm concerned, Decision 2024 is all about gold and silver, real money. They're going to win no matter who gets the most votes in this election and who ends up in the White House. In fact, gold and silver are already winning 2024. Did you know that silver and gold are the two top performing assets this year? And this might surprise you. It's in that order. Silver is actually the best performing asset. Gold is a close second. As of the end of October, silver was up by 42.4%, and gold was up by 33.7%. And this compares to a 24% gain in the NASDAQ, which is the best performing stock index. So gold and silver far outperformed both of them. In fact, gold and silver outperformed all of the major domestic and foreign stock indices. They outperformed commodities in general. They outperformed bonds. They outperformed the dollar. And I think this bull still has plenty of legs left. In other words, I think decision 2024 for gold and silver is going to extend into 2025. Gold has really gotten the spotlight, and even to the point where we're starting to see some mainstream folks interested in gold and talking about gold. You might go on CNBC or Fox Business and hear some positive things about gold, which generally isn't necessarily the case. And I think gold has really gotten the spotlight because it keeps blowing past records. The yellow metal has posted 39 all-time highs so far in 2024. The only year gold set more records, broke all-time highs, more times was back in 1979 when it broke its own record 57 times. And that was moving into early 1980 when we actually hit what at the time was gold's all-time price in real terms. In other words, in inflation-adjusted terms. Now, we've broken that. Actually happened last month. So we now have the all-time record in gold, even in inflation-adjusted terms. But for a long time, 1980 was the inflation-adjusted record high. So 1979 was kind of pushing into that. The next biggest after 1979, gold hit 38 record highs, so one behind where we are now in both 1972 and then also in 2011 as we were in the back end of the Great Recession. This is all happening too, despite the positive performance of risk assets, a relatively strong dollar, and increasing treasury yields. Over the last month or so, we've seen bond yields go up. I did a show on this a couple of weeks ago. Despite the Federal Reserve's rate cuts, the demand for bonds is falling. The federal government keeps borrowing, it keeps issuing new treasury bonds, and there's just too much supply for this market. And typically when you start seeing bond yields going up, that's headwinds for gold, since gold is a non-yielding asset, and that hasn't been the case. We're still seeing these record highs. And it's also interesting to note that even with the high prices, gold demand set a third quarter record. If you include over-the-counter sales, gold demand came in at 1,313 tons in Q3. That was a 5% year-on-year increase. The total value of third quarter demand rose by 35%. So that's combining the physical demand along with the rising price. And the total value of that demand exceeded $100 billion for the first time ever. So what's driving the gold demand right now? Well, flows of gold into ETFs were a significant demand driver in the third quarter. Globally, gold-backed funds increased their holdings by 95 tons in those 3 months. It was the first quarter of positive ETF growth since the first quarter of 2022. I think that's interesting because, despite the fact that we've really had a bull market in gold since last spring, Western investors really still they're late to the party. We've just started to see these institutional investors and stuff get into this paper gold. And I find that interesting. As the World Gold Council put it, gold's price rally, along with rate cuts and continued geopolitical turbulence, prompted Western ETF investors finally to pick up the baton. And I think you might see some more of that as we move forward. The geopolitical aspect, the wars in the Middle East and Ukraine, that's a significant thing that's going on that's I think people are aware of it, but maybe not to the extent that they should be. Jamie Dimon, who is the CEO of JP Morgan, he actually argues that we have started World War III. And I wrote an article about that this week, and I'll link to it in the show notes page. But I think people should pay attention to this geopolitical aspect of it, because I think that's going to be a important driver for gold demand in the coming weeks and months. Anyway, driven by this surge in ETF holdings, total investment demand for gold was 364 tons, and that nearly doubled last year's third quarter investment demand. So we are seeing a pickup of investment demand, but a lot of that, again, has been concentrated in the East, in Asia, in China, in India. Through the third quarter, investment demand totaled 859 tons, and that was solidly above the 10-year average of 774 tons. And while ETF holdings grew, bar and coin demand actually lagged a little bit due to a sharp drop in buying in China and Turkey in the third quarter, along with sluggish Eurozone demand. And the lag there was somewhat counterbalanced by a surge in Indian demand after the government there cut the taxes on gold and silver imports by more than half, lowering duties from 15% to 6%. So India took up some of that slack. We saw the kind of drop off in gold demand in China, and this is primarily due to economic factors in that country. Total bar and coin demand came in at 269.4 tons, which was in line with the second quarter, but it was a 9% decline over the third quarter of 2023. The World Gold Council noted that Western investors continued to show strong interest in gold, but this has been countered by heightened selling interest as the price reached record levels, resulting in far lower net levels of demand. So, a lot of people are cashing in as the price is rising. It might be a little early to do that, especially with silver, but that's people have to decide when they want to get in and out, right? As far as central bank gold buying goes, it slowed modestly in the third quarter. It came in at 186 tons, and this was below the 2023 Q3 record, but in line with 2022 levels. According to the World Gold Council, there are now clearer indications that the sharp increase in the gold price since March has indeed inhibited some central bank buying, as well as encouraging some selling among banks that manage their gold reserves tactically. And the Bank of Poland was the biggest buyer in Q3. It was also the biggest buyer in Q2, and so far is the biggest buyer of the year. Poland added 42 tons of gold to its reserves during that third quarter. All of this is based on IMF data that is compiled by the World Gold Council, and it's important to note that not all central banks honestly report their central bank gold buying and don't necessarily do so in a timely manner. So just something to keep in mind, especially considering China hasn't done anything officially in the third quarter. I kind of think they're probably still accumulating gold, but pure speculation on my part, right? Kind of wrapping up the demand statistics and data for the third quarter. Gold demand for industrial applications grew by 7% year on year, coming in at 83 tons. And this was primarily driven by demand in the electronics sector, which was up 9%. So what about silver? Well, silver's widely been viewed as a laggard, despite actually outperforming gold in percentage terms. And I think the biggest reason silver is viewed as underperforming is because it's nowhere near its record high, which is just below $50. It hit that twice, once in 80s and then back in 2011. I don't think it's unfair to criticize the performance of silver based on the fact that it's still so far from its price record, but it's also important to remember that historically, silver has lagged behind gold in the early stages of a bull market, but eventually it makes up the difference. It typically does it very quickly. It like snaps up, right? The gold-silver ratio is another bullish indicator in my view, and it's continues to be mired above 80 to 1, which means it takes 80 ounces plus of silver to buy 1 ounce of gold. This signals that silver is historically underpriced compared to gold. Typically, the average has been between 40 to 1 and 60 to 1, so we're well above that. And when we see this gold-silver ratio expand like this, it tends to snap back to that mean again quickly and relatively aggressively. So, that would seem to indicate that silver has room to run much higher. Many long-term investors still view silver more as an industrial commodity. And, industrial demand accounts for more than half of the silver offtake. With this in mind, it's important to note that industrial demand is booming, and industrial offtake of 654.4 million ounces set a record in 2023. Analysts expect industrial silver demand to set another record again in 2024. Meanwhile, this robust demand and sagging silver mine supply have resulted in a market deficit for 3 straight years. And that just means demand is outstripping supply, and it's expected to happen this year. So what's happening is particularly industrial users of silver are having to buy from existing stocks that are above ground. Mining supply can't keep up. And this is fine for now, but, it's like my carton of oatmeal. I take a half a cup out every single day. I can do that for a long time, but eventually that container empties. And those above ground reserves at some point are going to start to run low. And I think it's also interesting to note that with silver, we've seen this very steady growth in industrial demand, particularly being driven by the industrial sector and the green energy sector. And that's not going away, but we really haven't seen investors pour into silver yet. So when that happens, that's when you're going to really start to see the squeeze on supply, and we can really see some aggressive price moves to the upside. The technical picture also appears to be bullish for silver. If we look at the 50-year price chart for silver, we see a very distinct pattern known as a secular cup and handle. And if you look at the graph, it literally looks like a cup. It's got 2 high ends. It dips down to the middle to form the cup, and then you have a handle more recently. And this long-term cup, the twin pies are around that $50 per ounce that I noted. And then following the 2011 peak, we see a sharp decline in the price followed by a consolidation handle. And the handle pattern on the chart of this of any stock or commodity often precedes a breakout. So this cup and handle pattern is played out over an extremely long time frame, and historically, longer patterns portend bigger breakouts with a broader base, signaling a bigger upside case. So this cup and handle, very bullish for silver. I've talked about this before on the show, but just kind of giving an overview of gold and silver, where we are, where we're going. That technical analysis is important when it comes to looking at silver. Interestingly, gold followed a very similar long-term pattern, resolving with a breakout to new all-time highs, as we've seen over the last year. So all of that to say is, if you're still bullish on gold, and you should be also be bullish on silver. So why are we bullish on gold? Well, the things that are really fundamentally driving gold, which is monetary malfeasance, as I like to call it, that's all still in play, right? The Federal Reserve is back to easy money. It is trying to cut interest rates already. We're already seeing an increase in the money supply. So that inflationary pressure is going to remain and inevitably drive the price of both silver and gold higher. And again, silver tends to outperform gold historically in a gold bull market. So while silver's industrial applications make it much more volatile than gold, it tends to track with the yellow metal over time because fundamentally, silver is a monetary metal, just like gold. And, again, I'm emphasizing this. Historically, silver has outperformed gold in a gold bull market. So, the backdrop for gold investment looks solid moving into 2025. So therefore, is the case with silver. So, when you boil it all down, by the time you hear this, gonna be too late to vote. Polls are gonna be closed. But it's not too late to get real money. It's not too late to get gold and silver. I have a feeling you're going to need it no matter who wins this election because the monetary malfeasance is going to continue. Again, I guarantee the debt is going to continue to expand. The money is going to continue to be printed. Government's going to continue to spend. Your money is going to continue to depreciate, so you want to have gold and silver. That is, I think, the best decision 2024 you can make. So now is a great time to call Money Metals, 800-800-1865. Talk to a Money Metals precious metals specialist today. These folks are fantastic, and they can help you figure out how precious metals can fit into your investment strategy, into your portfolio, help you figure out what products will work for you, and they're a great resource. But if you don't want to talk on the phone, you can actually chat with these folks online. Just go to moneymetals.com and talk to a precious metals specialist there in the chat, or you don't have to talk to anybody. You can buy all of our products, all of our silver, gold, bars, coins, everything right on moneymetals.com. So do that today. And with that, we're going to call this a wrap for this episode of the Money Metals Midweek Memo. You can get more information on everything that I've talked about on the show and more over at moneymetals.com/news. And if you want to get the latest news and information relating to gold and silver right in your email box, make sure you sign up and get on our email list. Of course, you can subscribe to the Midweek Memo podcast on your favorite podcasting platform. And when you do, you can also tune into our Market Wrap podcast, which happens every Friday. On that show, you're going to get a quick overview of the week in precious metals, along with conversations between yours truly and interesting people from the world of gold, silver, economics, and investing. This week, I talked with Peter Kraut, who has written a really good book on silver. And so we primarily talk about the silver market, so you'll want to check that out. As always, I really, really appreciate the fact that you're taking time out of your busy week, out of your day to listen to me. I know there's a lot of stuff out there for you to listen to, a lot of things vying for your attention, so it means a lot that you've taken the time to tune into the show. So thank you very much. And we've got a special episode for you next week. We're having a Ask Mike Anything episode that I think you're going to enjoy. I've already recorded it because I'm going to be on vacation next week. Yay! So anyway, have a good rest of your week, and we'll see you next time.